It's
2,
on.
1. Welcome to Prime Properties. I'm Michael Morris, and today we've got a special guest, and we'll say an Instagram guest because that's kind of how we met each other. We've got Taylor. I'm going to blow this. I'm going to blow it right
That's
away.
all right. It happens.
Because I just feel bad because I had to ask you twice. Taylor Kolon.
That's correct. Yes.
And we've established off the mic that this was not a name that was easy to grow up with, but I'm glad you're here. You're going to fight that stereotype and you're going to be happy about it.
Yes, I am. I am.
How are you? First of all, introduce who you are and who you're with.
Yeah, well, thank you, Michael. I'm Taylor Kolon. My company is the Peer Equity Group at Keller Williams Capital Partners. I am the owner of the company and also a licensed real estate agent for the past 6 years.
Now, let me ask you, so the reason I say we were Instagram buddies is because a lot of times when we post the shows, we're doing that to invite other people to come on board.
Sure.
So I was so happy that you guys jumped on and said, how do we get to be a part of this fantastic thing? In your experience in the last couple of years, you've been in this 6 years, so you've seen the growth of the Columbus market especially. What are you seeing from your standpoint, being kind of an O&O on your own?
Right.
What are you seeing personally in this market?
Yeah, well, the first thing is home values are skyrocketing right now. And a lot of that has to do with two things. Millennials are becoming much more popular as far as first-time home buyers. And also there's a lack of inventory. So when you have a supply and demand factor like that, obviously it creates an environment where home values continue to increase, especially in areas that I like to call it kind of inside that 270 loop, where you start with the center and work your way out. So that's one thing that has changed drastically in the last 6 years.
Well, let me ask you about the 270 loop, because everything we do in our business, in marketing, radio, whatever it is, the 270 loop is the most important thing. It's kind of like the cereal bowl approach. Everything inside of it is good. Anything that falls outside, it seems to kind of fall off.
Right.
Are you seeing growth across the entire loop? Because 20 years ago, if you went to the east side, it was more of an established older community, kind of passed down generation to generation, but it doesn't seem like it's that way anymore because of what you said with inventory.
Right.
I think you guys are looking for houses to sell wherever they're at, right?
Right, exactly. And there's certain advantages to being outside the 270 loop, you know. Larger lots, typically that's where you'll find those, you know, so there's an advantage to both sides of it. And what's really challenging right now also is builders are also having a hard time keeping up with demand. We're moving, I think the stat is, you know, 85 people a day to Central Ohio.
Right.
And so when you have that much of people coming to Central Ohio, it's really challenging to keep up with that type of demand from building, infrastructure, whatever it may be. When
you're saying building, you're talking about new builds, right?
Yeah, new build construction, yep.
Is it because we are kind of an under-housed area, because when the crash hit, the builders kind of went away?
Exactly.
So now we're trying to catch up on where we've been, because we still brought more people because bigger industries came. This is one of the biggest locations for Chase nationwide.
Oh, yeah.
Those people want a home. They don't want a condo or an apartment. Where you see, is that kind of, are you butting up against where there's not enough properties in the new build area, or is it the existing homes and you can't find enough of those to sell?
Well, I think the problem starts with the new build side of things. Obviously, you need a place for people to go from and you go to. And you mentioned, you know, the downturn. What's interesting about that is we didn't stop making people, you know,
right?
But we stopped making homes.
We stopped building new homes,
right.
But people still came.
Right, and so when you reduce new builds by around 50% and you gradually increase them to right about the point of now when they were post-recession era, you still have a huge gap that you're trying to make up. And the builders don't want to take on the capital and the risk to go ahead and take that leap of faith to do that. And you're right. I mean, our economy here in Central Ohio is fantastic. It's very, very diversified, much unlike a lot of other Midwest cities. I mean, you mentioned Chase, Huntington. You know, they're in the financial sector, right? And then you have, as far as retail, limited brands, Abercrombie.
We've got the Amazon.
So you got tech here now, right? And we got some industry in Worthington Industries. You know, so it's very diversified, in which protects the economy in the event of a correction or another downturn. One industry might take the hit, but there's other that kind of bring it up, so to speak.
Right. Average house still about 31 days on the market?
Oh no. We're getting into the spring season, which is the selling season. So, and that it varies in certain areas, obviously, but I would say you're probably looking at, I mean, if you're working in like a Clintonville or a German village or something like that, it's probably a couple weeks, something like that. But it varies based on, where the location is.
I've been told it's deceiving because a house can be on the market, but it's not released to the public. It's more of a realtor's holding onto a property and knows they can turn it. So really, the time on the market might be 7 days, really.
Sure.
But I'm going to slowly release it because it's kind of a gem. I want to hold on to it. What are you seeing? We're through first quarter, going into second quarter. It's still hot, but it should pick up a lot more because school's going to end, and people are going to be more willing to move school systems or just get in that. Not just the millennials, but it's the people with families. I would think this is the hot time for them to start looking.
Yeah, and people don't want to move in the wintertime, right? You're dealing with snow, a bunch of other factors. And you're exactly right. Once weather starts to change and kids get out of school, that's when we get into the real big buying and selling season. But yeah, you're exactly right.
I do find the millennial situation to be, I'm in my 40s, so when people talk about, especially on this show, when they talk about millennials, they don't necessarily have the financing available. That it's not like it would have been. As a kid, it was always you had to have 15 to 20%. You better be ready to put that down no matter what it was. Are you seeing that they're not as prepared for they want to buy a home, but they don't have that nest egg to really start it. So where do you kind of start with those people?
That's a fantastic point, Michael. It's funny because, there's a lot of assumptions that go into purchasing a property. And a lot of those assumptions are fueled from parents, right? Mm-hmm. Which we are now selling homes completely different than what we did 20 years ago, whatever it may be, 15 years ago. And so when I have clients that come in for a first home buyer's consultation, I alluded to like having a child. You sit here, you have your first child, and you have these assumptions. Okay, how are we supposed to do this? What are we supposed to do with this? Then you turn to Google, and you don't know how credible the source is that you're getting from Google, right? And so then I think it's this thing, my wife thinks it's another thing, and then next thing you know, we both really have no clue what we're doing, right? We're just trying to figure it out.
But you both did your research, you just don't know how to put it together.
Right, and Google is a fantastic source, right? And so I feel like that the first-time home buyer, that's where they're going right now, right? They're going to Google, they're going to the internet to try and find information as far as how to purchase a property. And I think the best way to do it, I know the best way to do it is consult with a professional, right? Get in front of someone, ask the tough questions. We, as a group at the Pure Equity Group, we sit down with first-time home buyers. It's almost a must, right? We can't go see a property until we set out the expectations, until everyone is aligned on what to do, how we're going to do it, and there's a game plan in place. Because we don't want to just throw someone in the front of a car. Next thing you know, we're driving around to 7 different neighborhoods. We're looking at price point that ranges from $200,000. It's not efficient time for anyone, right? And if we're the professional, and if our clients trust us, then we're going to be able to move through this process much more efficiently than if we were just kind of winging it, so to speak. Does that make sense?
It does. I guess when I think about it, it's the new generation of, I would say they're more of the credit generation. Mm-hmm. Everything's on a credit card or a debit card, so they're used to that. It's not what's in my bank. And when you look at 68% of Americans don't have $1,000 in their bank account for a medical emergency, do they have the down payment for a house?
Right.
That's taking into account everybody from 18 to 64 years old. The younger they are, I think they are more liquid because they can use a debit card. But when it comes to buying a house, how have you set yourself up to get into that market? My biggest fear when you see this is, when you look at the economic collapse when it came to houses, it was all on credit.
Right.
If you had a great credit score, we'll put you in as many of these as we can.
Right.
But the issue was they didn't have what it took to move forward. If property taxes go up, school levies, whatever, they might have just been able to afford that initial balloon payment. I just don't know if they're prepared for that next level. And I'm not saying you have the answer, but I thought it was something interesting that you kind of brought up.
Yeah, and what's interesting too is there's several different loan programs that are out there. A lot of people don't know that you don't need 20%. You can use as little as 3%. There is even financing options out there for 0%, down. And so what that looks like is maybe the first-time home buyer is able to hold on to a little bit more liquid cash, maybe use it in other investment areas, and they're okay with a higher monthly payment, knowing that they have this reserve, this safety net that they can use if they really need to in case if something happens. You never know. There's always medical emergency, something like that. But having that cash in the back of your pocket might be much more beneficial to putting 10, 20% down or 15, whatever it is. And that's why the consultation is so important, because we need to know what the client is going through, where they're at financially, what they're trying to do. Is this a 5-year? Is this a 10-year? Is this a 15-year home? Because then we can help introduce them to the right mortgage professionals, the right people to almost cater or tailor what they're looking for.
But that's what you have to do, right?
Yeah.
I mean, your job is really, I look at it almost like the having a child thing, I think, is the best way to look at it, because you've got to get that child, let's basically say, from birth to graduation day, right, to get in that house. How do you feel about Zillow and Redfin when you see those commercials and all that? The only reason I bring it up is I will watch, television across the country, and I saw Redfin. These commercials are, you don't even need somebody. Just get on our website, look this up. That's not really how this works, because you need representation. We're kind of like in an Amazon society where it's, I don't mean like the really big people. I mean like when I'm going to buy things online, I don't want the interaction. If you don't have the interaction, you don't know what's a good lender to go to.
Right.
Is this property listed and it's not even really available?
Right.
Can you kind of speak to your experience with the real estate agent versus the Zillow consumer?
Yeah, that's a great point. And the real estate industry is changing drastically right now with Zillow, with Redfin. And I couldn't agree more, right? The reason I think that Zillow, Redfin exist, and they are working into the iBuyer space, is because people are so scared to get into the market. And it's the easy way, right? It's the easy way to click on an advertisement or reach out to an agent that's online, something like that, and then they reach out to you, and people want the path of least resistance, right? And getting in front of a real estate professional and asking questions where it may be uncomfortable, because it's a very intimidating process involving hundreds of thousands of dollars, right? It's very scary.
But do you think it's the whole, I don't want to say sticker shock deal, but I know this agent's making money. Because the way that these things are positioned, these online brokerage type things, is save that commission.
Right.
There's a reason that somebody's getting a commission. It's because they know what they're doing and they're there to guide you.
Right.
Right. I don't want to put an answer in your mouth.
No.
That's the way I look at it. Is someone thinks I'm going to save 3%.
Right.
3% on a $200,000 home, that makes some sense. But
sure,
if I get myself into trouble, where do I go?
Right. And also, people don't understand what the value is of a real estate agent. If you're able to communicate what value you bring to the table ahead of time, and you build that trust and you build that rapport, then they're always going to come back to you, because then they understand why you get paid what you get paid, right? And it's funny you mentioned that, because we get to the closing disclosures, and a lot of people don't even know that real estate agents get paid at the end of a transaction, right? I mean,
I'm not taking a fee up front.
I'm not getting an hourly wage from Keller Williams by any means, right? And so once you explain that to people and you say, this is a business for me, I put on a collared shirt, I'm in the office at 8 o'clock, this isn't something where I'm at home in my underwear on my laptop just trying to find homes for my clients.
There's nothing wrong with it if that's what you do,
right?
Because that's what I choose to do on Fridays, but I understand what you're saying.
Yep. So it's a job for us, right? It's a profession. We care about our clients, and we want to represent them the best way we know how. And for us, you're exactly right. For us as our team, we're in the office. We have expectations on what we're supposed to provide to our clients, and so that's where the value lies. And as long as you communicate that up front and they see that, then they don't have a problem with any type of what the commission is.
See, I don't think people would begrudge the commission part. I think it's a smart thing on Redfin and Zillow's part that save that commission. But at the end of the day, saving myself $6,000 may not be as important if I chose the wrong lender, if I don't know what's going on in the community, especially like school systems. I'm not going to find out from a listing online what's going on with the school system. I need somebody that's kind of boots on the ground, and that's what an agent is there for. Sure,
absolutely. And that's something that we're well versed in, right? I mean, real estate transactions can get very, very sticky, There's two sides that are trying to essentially represent their client the best they can in a negotiation. And there's several different points of negotiation throughout the transaction. And experienced agents, ones that know what they're talking about going into the transaction, usually are the ones who are going to be representing their clients the best. And think of it this way: if the agent that is associating themselves with Redfin, something like that, taking a discount, what are they doing on a daily basis to improve themselves, right? It's easy to go to Redfin. It's easy to go and be the iBroker and have leads just get sent to you, but how are they looking for buyers and sellers that before the property's hit the market, right? For the clients that they're currently representing. How are they going above and beyond when they're just getting the leads that are getting sent to them, you know?
I just, when I think about the way that transactional business is, it's, you have to meet with a banker.
Yeah.
You have to meet with, buy a house that way.
Right.
And I guess that's the way I'm looking at it from your point of view is, it's got to be frustrating to you that it looks so easy to do real estate when it really is not.
Right.
I mean, there's a lot of hassle that goes into it, but when you get that person in the right home and in the right area, it's kind of a win for you, right?
Yeah, I mean, you don't get into, I do make money doing what I do. I wouldn't be doing it if I didn't make money, but it's not the reason why we do what we do, if that makes sense. I mean, we care about people. I came from the corporate world, and it was challenging for me to find value in working for corporations when they can kind of direct you and go wherever they want you to go, moving wise, relocation wise, right? But here in real estate and doing what I do, I get to interact with families, people who are looking for their first home purchase, and it's much more rewarding for me to add value to someone directly. It's much more gratifying, and we do it because we care about our clients, and we're not doing it to collect a paycheck, even though that is kind of a secondary thing.
Well, it's a result, right?
Right, exactly. And I mean, I'll be honest, I'm in this for my family, right? My wife and my 2 kids, and it's providing opportunity for them through doing something that I love and caring about other people.
Well, because you have an emotional attachment to
Sure.
putting people in a home, I mean, that's a plus to it, right? How do you determine when someone comes to you, do they typically have something in mind what they're looking for, or how do you determine where you're going to put them? Because I remember when I bought my first house, it was about proximity to work, really. And I didn't have kids at the time.
Right.
Needs changed over a 5 to 6 year period. So to the point where this school system's not what I thought, but I didn't think about it at the time. You kind of have to dig into somebody's backstory and see where they're going to go, right?
Right.
To put them in the right place.
Yeah, and it's funny, like when I'll get a lead from, say, a past client or something like that, I'll have communication with one of the 2 decision makers, the wife, we'll call it the wife, right? So, hey, what are you guys looking for? She tells me the top things that she's looking for. Then they come in for the home buyer's consultation, and I put a piece of paper in front of them that basically is one piece of paper that goes through the things that she's supposed to be saying, right? And in all actuality, the husband wants something completely different, and when that one piece of paper is in front of them, they're having a discussion trying to figure out what they both want.
So you become the marriage counselor.
Oh, right. I should get paid for that too, right? But a lot of times they don't know, right? And so then when you ask the questions, what's important to you and why is that important to you, then they start to unveil certain things that they're looking for that they really had no clue. And so is it marriage counselor? Indirectly maybe, but it's probably more just diving deep into what that home looks like for them and what that timeline looks like too, because if someone wants to be in a home for 3 years, well, resale is going to be very important. Now, if someone's going to be in a home for 15 years, it's not going to be as important because the value is going to be in living in something that you love, right? And resale, I can't predict.
But see, that's what I like about what you're saying is that you're not determining, but you are asking the probing questions to figure out what their long-term goals are. Because I see that a lot of people, especially when we're talking about real estate on this show,
right,
people fall in love with a property, the consumer does. The agent doesn't seem to really have the emotional attachment whatsoever to the property. It is, here's a resale value, here's your school systems, here's development in your area. Like we've talked about in past shows, Delaware is exploding.
Right.
But it's more the consumer end of things is exploding. So now people want to live where there's restaurants, there's shops and all that. They're not thinking about the fact of what's the water system going to be
right,
up there? What's the waste management system? Because it doesn't exist there, right?
Right.
So everybody wants to be around these things, but I think that's somewhere you've got to step in and go, did you think about this and this and this?
You're exactly right. And also there's a lot of realtors out there that don't do that, right? It's, someone finds an emotional attachment to something, and it's our job to make sure they're seeing the complete picture of what that property looks like based on what they told you were their needs at the beginning of the process.
Right.
And I think that's incredibly valuable.
In the beginning of this, did you ever find yourself emotionally attached to a property where you so badly wanted it for somebody else?
Absolutely.
But do you do that anymore? Because I would think after you see so many houses, you're looking at it from a practical matter. Because to me, I've got a guy that hosts a show on these networks, and his thing is I look at it as an investment property. Even the
Right.
house that he lives in. Like, he doesn't care about anything because I'm going to remodel the entire inside the way I want it, blah, blah, blah. A lot of people see something and it's like, I can see raising my kids here. I
Right.
can see putting a fence up
Right.
and I have a dog. But do you still get that emotional feel of a property?
Well, I get emotionally involved because I care about the clients, right? And so when we have the consultation and we go through the wants list, so to speak, and I see a property that fits the bill for them, and they may not see it, that's when it becomes a very tricky situation.
Does it become more persuasive or more kind of like, we should look at that again?
Or you say, let's go back to the beginning, and these are the things that you guys mentioned that you really like, and resale was incredibly important, and look at where this area is performing. Now, I know the kitchen may not be what you wanted. It's not looking like Chip and Joanna Gaines, right?
Right.
But there's ways to improve that and increase the resale value going forward. And so if you can guide them that direction, I don't sell the home. The home sells itself. I just try and educate them.
But you don't want to put too much influence
No.
in it because you like it that much. It really has to fit their needs.
It has to come from them. Exactly.
What's the most challenging thing that you've come up with in the last, let's say 18 months? Because the market's been really hot. Is it, I don't have anything right now, or is it finding the right piece for the right person?
Well, you're right. It's changing a lot. So if we're going back 18 months, last February, March, we were in 1.2 months of inventory. So if you take the amount of homes that are available, divide that by the number of homes that sold, that's how you get that number, which was the lowest inventory that Central Ohio has ever seen on record. We jumped up probably close to 2 months of inventory, and now we're right around 1.7, something like that. So it's been going up and down right now. Mortgage rates just came down. I think that's also helped get a lot of buyers to the market in the past couple weeks. So we're certainly starting to see a lot more activity right now. It's just kind of trying to keep up with everything that's changing in the news regarding money, regarding interest rates, home values, that sort of thing. It's fun, right? It keeps you on your toes. It keeps you engaged with what's going on. You have to be, because your clients are using you as a resource to communicate that information to them, and credible information.
You said something, and it's everything you said is correct, but when you see that rate fluctuation, and it's not fluctuating from 4 to 11, and it's not like it used to be in the 70s, are consumers still worried about that? Here's why. Anytime we're talking to somebody just at this radio station,
Right.
Oh, the mortgage rates are going up. Are you buying a house? Like, why are you even talking to me? It's like a conversation in the hallway.
Right.
I don't think people really understand where that's really coming in and why that matters to you. Are people holding back, or are they jumping on board because of that? To me, it would be 5% of my total interest in why I'm buying a property. That's my own opinion.
Right. And I think you're exactly right. I think that there's some people who watch it very, very closely, right? And there's a lot of people who are in the market, and as long as interest rates aren't in the 6s and 7s, it's not going to matter too much to them. I communicated when interest rates fell recently last week. I communicated that to 5 or 6 of my clients who are active buyers right now. And thanks for the information. And
they did nothing with it,
right?
Well,
they didn't even know. I mean, I sent the text out maybe like a day or two later, but they didn't know. They're like, "Oh, this is great,"
I feel like it's almost like, your milk's going to expire at the end of the month. Oh, great. Like, they don't really react.
Right.
I want this home at this time, and I don't care what the interest rate is. I think it's something that it's always something that gets brought up.
Right.
And if it's really high, then people are, scared off. But that doesn't seem when the market's hot, that rate is not that high to begin with, right?
Mm-hmm.
The market's really hot, and the rate is reasonable. It's low.
Yep.
So people can still jump in.
Yeah, and we're now starting to see millennials jump into the housing market, right? And they are starting to control their student debt a little bit more. The average age of a home buyer is much higher than it used to be 5 years ago. So they're feeling more comfortable getting into the market. And yeah, you're exactly right. I don't think that they're paying as much attention to the interest rate, but we're also operating in an environment I mean, the average interest rate it's like around 8 if you're looking at a history of interest rates. And we're still operating in the 4s, and which is fantastic.
And
so
the economy is booming. So everything is kind of going along the way it should. So it's got to be a really good time to be you.
Yeah, well, and the question is, I get this from a lot of first-time home buyers, when's the market going to crash again? And
I hate that question because that tells me you're waiting and you're going to buy that $1 million mansion for $250,000 at a bankruptcy sale. It's not going to happen.
No, and then when the market does correct or go down a little bit, people are then reluctant to buy again because like, oh, the market's going down. I don't want to buy.
Yeah, I want to wait till it rebounds so I know I'm getting my money's worth.
Right.
It doesn't work. People think it's like monopoly, I think, with properties.
Everyone tries to time the market to make it the perfect time to buy, but in all actuality, you're waiting for your perfect time to buy. And I have a 10-month-old at home and a 3.5-year-old at home. And so we just went through the process of, okay, are we ready to have another baby or not? And I'm sitting here, I'm like, when is the right time to have a baby? There isn't. There's always things happening in your life, right? It doesn't stop. Life is always going to continue to move. You just have to get into it to make it what you want it to be.
That's a perfect way. We were running out of time anyway. You just summarized everything. It was amazing. Tell people how they can get a hold of you if they want to reach out.
Yeah, so our website is www.pureequitygroup.com. Again, my name is Taylor Kolon, Kolon, just like, we'll call it the punctuation mark.
There you go.
And my phone number is 614-600-7503. And we have a team of 3 agents, licensed agents on our team. We have an events and a marketing coordinator, and we have a transaction coordinator on our team. We're growing rapidly, but it's a lot of fun, and we're definitely keeping up with making sure we're continuing to add value as we grow to our clients.
Well, I want to thank you for coming on because this is awesome. And
I'd
like to have you come back again because I didn't even get to half of my questions with you. But fantastic job today. You've been listening to Prime Properties. We will see you next week. We got 27 on the dot, brother.
Good?
Excellent.
Awesome.
I told you it would go really fast.
It does go fast.
That was great.